Hey guys, it's Chris Wong. I'm filming this video as of October 20th, 2025, and I'd like to talk about major changes I made in my Questrade TFSA. So as a disclaimer, I'm not a financial advisor. I'm just a guy interested in building a portfolio and trying to achieve financial independence, retire early. So I like to invest in ETFs that pay me dividends every single week or every single month. And I use margin in order to try to get ahead or to try to achieve the lifestyle later in life of be able to still use margin and feel comfortable when the market goes down, and I can still live off the margin as well. So the biggest change I made in my Questrade TFSA was I decided to reduce my HYLD.U position down to like just about 10 shares, because I actually want to take advantage of the capital gains that I won't be taxed on because it's my TFSA, and I also want to protect my buying power available in the event the market goes down. I cannot predict what's going to happen next month, the next day, 3 years later, but is this a good move? I don't know. I'm actually just doing this in the event it goes down, because if the S&P 500 goes down 20%, then I would expect HYLD or HYLD.U to go down around 20%, and that's going to affect my buying power available to purchase or my buying power available to withdraw out of the account. My buying power was very low because I kept using margin, but then I didn't want to sell the other funds because I couldn't figure out which ones I would sell at a profit. So I saw HYLD.U. I had a huge profit from selling most of it, and then I actually decided that I was going to get two different cash ETFs, PSU.U, which is by Purpose ETFs, and HISU.U, which is by Evolve. So these two cash ETFs, the distribution is around 3 or 4% distribution yield, so it's going to pay a lot less than HYLD.U. But what I find after looking at the past performance of this fund, it looks like it's just going to range between $100 USD as the lowest point and maybe $100 and say 30 cents, depending on how much interest they want to pay out for the month. So it's also a great way to put money aside. And I also find that because I'm using margin and because I'm only charged margin on my margin account, so it's just in my TFSA, I'm going to earn tax-free distribution. I did find out the margin requirement to hold these two ETFs, it's 30%, just like HYLD.U. So if I were to try to do something else that has 50% for the same dollar amount, then it could put me into margin call. My buying power in my margin account is also linked to my TFSA. So I actually looked at it as a way that if I ever was in margin call, I could just sell the cash ETFs, and then I wouldn't worry about what the share price is, because it's just going to be between $100 and say 30 cents at most for the share price. So I wouldn't really lose anything. But I'm also missing the potential growth of HYLD.U and the monthly distributions, because the distribution yield of HYLD.U is like 12%. So each month I'm getting paid 4 times less, and I'm also not taking advantage of the growth of HYLD.U when the S&P 500 goes up. Over time, when I was learning about how buying power works or how margin works, I always looked at using margin as like a balance sheet. Total assets equals liabilities plus owner's equity. And when the stock prices are much higher, then your total assets are much higher and your equity is generally higher. But when the market goes down, the liabilities that are used to borrow the money to buy the funds stays the same, but then the share prices go down. That means your total assets and your equity goes down, and if it drops below a certain margin requirement, then that's a margin call. I know I'm missing out on tax-free dividends from HYLD.U from this account, but I also invest with Wealthsimple, and Wealthsimple is my primary account that I generally use to pay for my expenses. I also looked at it in a way that if I have enough distribution from PSU.U and HISU.U, I can always just use the distribution to buy shares of HYLD.U again, or considering buy HHIS.U. So speaking of the balance sheet view that I use for myself, I actually was using that approach to calculate how much percentage of equity I actually had in the account and how much I possibly had to contribute to the account. So that's why I actually decided to try this approach, use cash ETFs as my main backup. If I have to sell some funds, I'll just sell the cash ETFs if I have to, and I just try to let the funds I have in my margin account just keep collecting the dividends, pay down the margin, and even if it does take like 5 or 6 years, it's still a lot better than trying to get another type of loan and use work income to pay off the loan. I hope you guys liked the video. If you liked the video, please give me a thumbs up. Otherwise, please subscribe to my channel for future videos. Thank you guys for watching.